Good morning. In about 10 minutes, I will be joined by Mrs. Wambui Chege. She is the chair of the Making Finance Work for Africa Partnership, and she will moderate today's panel session. After the housekeeping and a quick introduction to the African Long-Term Finance Initiative, Albin Kaku, the Principal Investment Officer with the Capital Markets Development Division of the African Development Bank, will give us an overview of the Capital Markets Development Trust Fund. After the 70 minutes panel discussion, Ahmed Atout, manager of the Capital Markets Development Division of the African Development Bank, will also deliver the closing remarks, and the moderator will be happy to introduce the other panelists. 371 individuals registered for today's webinar. Thank you all for attending, which will last an hour and a half. During this time, all microphones will be muted, and you can ask questions during the session through the chat box at the bottom of your screen. As always, slides and the recording of the webinar will be available after we conclude on Making Finance Work for Africa portal. In case you're experiencing any technical issue, please feel free to send us a quick request, and we have a team in the back to provide support. Finally, please remember to fill out the survey that will appear after the session. And that ends the housekeeping items. Just to dive in the subjects, long-term finance, as we all know, is instrumental to productivity growth and job creation. Just to cite a few, and most experts agree that banks are the most important providers of long-term finance in Africa. However, long-term finance, long-term loans rather account for a relatively small portion of all banks' loans. We are Making Finance Work for Africa, along with our partner the African Development Bank, commissioned a regional financial sector profile. And the preliminary findings show that while banks' loans make up to roughly 20% of GDP in sub-Saharan Africa, long-term finance nevertheless accounts for just 4% of total bank loans granted to the WAMU economies, and only 2% to Central African economies. On the other side of the equation, domestic investors, the insurance sector, and capital markets remain, as you all know, largely untapped. There is then a glaring gap when we contrast these estimates with the $700 billion needed to finance the continent's need to achieve the AfDB's high five. So the question of sources of sustainable finance for growth on the continent remains. Today's webinar will provide also an overview of local currency bond market state of play as a source for long-term finance. But before we jump into the subject, I would like to highlight what we all know about data on the continent. In fact, there's a significant data gap on the continent, and the subject of long-term finance is no exception. The challenges to get up-to-date, complete, and accurate data were substantial. That's one of the reasons why Making Finance Work for Africa, along with our partners at the African Development Bank and other partners, we embarked in a couple of years ago on a project to bridge that data gap. The project, called Africa Long-Term Finance Initiative, is now available to everyone online. On the website, then you'll be able to access two important tools: a scoreboard and country diagnostic reports. Just to tell you briefly about those tools, those resources, the scoreboard is really data-rich platform, and it includes several key indicators on the provision of long-term finance on the continent. It covers most African countries, and I would like to stop here to thank not only the bank's statistics and research department and the experts, consultants who worked for months to make this project possible, but also the heads of African central banks and our central banks focal points, whose dedication and commitments have and continue to make a significant difference. The second part of the initiative is the country diagnostics. The diagnostics reports don't just identify the hurdles. They also suggest structural, institutional, legal, and regulatory recommendations. The report on Côte d'Ivoire is available on the initiative website. We are currently working diligently to complete the Ghana and Ethiopia diagnostic reports, which will be soon available online. Production of these reports would not have been possible without the funding of our partners, and we would like to thank them for their support. And we also at the same time welcome new donors' involvement in this initiative so that we can continue to provide diagnostic tools to policymakers, practitioners, researchers, and the public at large. The Capital Markets Development Division of the bank also leads several initiatives, and I'm pleased now to invite Albin Kakou, Principal Investment Officer of the African Development Bank, to give us an overview of one of the bank's multi-donor trust fund for capital markets development. Albin, the floor is yours.
No, good afternoon, everybody, and many thanks, Guy, and the World Making Finance Work for Africa team to actually co-host this webinar with us today. Essentially because the Capital Markets Development Trust Fund, CMDTF, is a fairly recent initiative of the bank. We thought at this stage that it would make sense to present it briefly before delving into the discussions. So the Capital Markets Development Trust Fund, CMDTF, is actually a grant vehicle that was established in December 2019. And essentially, it aims at developing and supporting African capital market stakeholders and institutions through the provision and deployment of technical assistance and analytic works. So it's essentially established as a multi-donor trust fund. And the initial funding partners of these trust funds are the Ministry of Finance of Luxembourg and the Ministry of Foreign Trade and Cooperation of the Netherlands. Essentially, the trust fund is supporting the bank's efforts in terms of domestic resources mobilization, and is also targeting to help our regional member countries to finance the real sector as well as the bank's I5 priorities. So in partnership with our donors, we have developed quite a comprehensive theory of change to guide our interventions. And essentially, we have 4 main areas that we are looking at. So the first one is about improving the capital markets and regulatory and legal frameworks across our regional member countries. The second one is actually about improving market infrastructure, and essentially here we are looking at upgrading trading platform, CSDs platform, so on and so forth. The third one is about diversifying the capital markets product offering. Here essentially we are looking at introducing new asset classes such as asset-backed securities and also sustainable finance instruments. And the last one is about broadening the capital markets investor base. So for the first 3 years of the fund, essentially, we're looking at supporting West Africa capital market stakeholders Essentially, this is to actually prove the concept before expanding to other regions of the continent. I mentioned it's quite a fairly recent trust fund, but in 2 years, we've been able to approve 10 projects. Essentially, our clients or beneficiaries are stock exchanges, central banks, CSDs, debt management offices, institutional investors. And I think today's topic is quite in line with the overall mandate of the fund. Really, we are trying to establish activities to promote long-term finance, and I think it's quite timely at the times where our countries are actually trying to build back better. And what we're seeing is because pretty much the fiscal capacity of our regional member countries are a bit constrained, definitely capital markets will be a good avenue to leverage to finance these post-recovery efforts. So that's why we thought it would make sense to have today's webinar on promoting long-term finance. As you will see during the panel, essentially it's a joint effort to promote bond markets and long-term finance generally, which would involve governments, capital market stakeholders such as stock exchanges as well as the FIs. So that's why on the panel today, we thought it would be useful to have the perspective of two innovative stock exchanges. We have the Stock Exchange of Mauritius, as well as the Ghana Stock Exchange, but also the perspective of two DFIs. So we are quite grateful also to have EBRD represented, as well as the Capital Markets Development Division of AFDB. So I will stop here. If the audience would like to have additional information on the CMDTF, you can also visit our microsite on afdb.org/CMDTF. So I will stop here and wishing everybody fruitful deliberations. Thank you.
Thank you, Albin. Now, Mrs. Chege Wambui, she's a seasoned international development expert with years of experience in African financial markets. Mrs. Chege Wambui is currently the chair of the Making Finance Work for Africa partnership. Without further ado, I invite today's moderator, Wambui Chege, to lead us to the panel discussion.
Sure, thank you. Thank you very much, Guy. Thank you, Alba, for your presentations and introductions to the work that is being done on capital markets development. So I'm really hoping that we will have a great and interesting and robust discussion. This is a topic that's very close to my heart. I started out my career and I've been working for over 25 years now as a journalist. Working for Reuters, covering capital markets. I was based in Nairobi, then moved to Tanzania, and there it was really very young, but then moved to South Africa, which was much deeper and bigger, but very interesting. Then I have also worked with IFC, where we worked to try and develop actually long-term financing instruments to support housing markets in different countries, Ghana, Burkina Faso, Uganda, and there it was very clear the challenges that African countries face. And if we had deeper and more well-developed capital markets, then it would be much easier to solve some of the big development challenges that we have on the continent. So I'm very happy about this discussion and also really looking forward to hearing what is going on in the markets on the continent. So I'll start this session by introducing my panelists, and I'll start by introducing Abina Amoah, who is the Deputy CEO of the Ghana Stock Exchange. Abina is the first female executive director of the Ghana Stock Exchange since it was founded 31 years ago. She was appointed Deputy Managing Director in August 2020. She is a trailblazer in capital markets industry and has led on several landmark transactions in the past 23 years. She has served on several bank boards, financial institutions, and she is an advisor to the West African financial sector policymakers on the deepening of financial markets. Welcome, Abina, and we're really lucky to have you here. Then we've got Mr. Ahmed Atut, who is a division manager of Capital Markets Development Division at the African Development Bank. Ahmed has more than 21 years of working experience in MENA and Sub-Saharan Africa regions with a proven track record in originating, structuring, and leading financial sector operations, as well as infrastructure development projects and capital markets transactions. He is heading the AFDB teams in charge of developing the financial markets in Africa by deepening and widening domestic financial markets, crowding in pension funds and insurance companies, and promoting access to long-term currency funding, local currency funding. Welcome, Ahmed, and really looking forward to hearing your views. Then we've got Mr. Sunil Benimadu, who is the CEO of the Stock Exchange of Mauritius. Sunil was appointed Executive Director of the Stock Exchange of Mauritius in October 2008. And until October 2020, he served as the chairman of the Global Finance Mauritius, the apex body of private sector operators in the financial services industry in Mauritius, aimed at positioning Mauritius as an international financial center of excellence. During his tenure, he played an instrumental role in the setting up of Mauritius Finance, which is now the leading voice for financial services industry. Welcome, Mr. Sunil, and really delighted to have you on the panel.
Pleasure.
And last but not least, we have Jim Turnbull, who is the Deputy Director of Capital Markets Development at the European Bank for Reconstruction and Development, EBRD. Jim joined EBRD in 2011. He has over 30 years of experience in investment banking, pension funds, management covering debt and equity portfolios, foreign exchange, fixed income, derivatives, and treasury management in both emerging and developed markets. And before joining EBRD, he led the team that developed Asian Bonds Online for the Asian Development Bank. And he has served in a wide range of capital markets projects across the world. So I'm really, this is very exciting. I'm going to start the session by asking both Sunil and Abina to tell us about the experience of growing local currency bond markets in their countries. As Guy pointed out, there is a huge need for local currency financing, and the bond market is an untapped sector in many African countries. So I'll start by asking Abina to take the floor.
Thank you very much, Wambui, and good afternoon to all our viewers and to my fellow panelists. First, thank you very much to African Development Bank for all the work you're doing to support the growth of our capital markets and also to making finance work for Africa. I'm really delighted to be here. The journey to grow Ghana's local currency bond market has been a very long one. As many of you will know, the stock exchange started 31 years ago and set up our equity markets. And over the years, we had worked really hard several times to formalize the local currency debt markets as well. That market had been dominated by our commercial banks who were trading essentially for their books. And several of those initiatives hadn't worked out, but we realized in 2015 that our private pensions fund, which had been liberalized in 2010, was growing and expanding. And suddenly this new group of investors were in the market actively looking for exposure to other asset classes. Prior to that, they had just been investing in treasury bills and bonds. Now treasury bills, government treasury bills, and now they were looking for exposure to more diversified products. So with this growth, we realized that it was just about the right time to start organizing the market. How we were finally able to crack it was through a collaborative and partnership approach. The Ghana Stock Exchange came together with our Ministry of Finance, the Bank of Ghana, the leadership of the banks themselves, the licensed dealing members of the stock exchange, and through the Central Securities Depository. Through all these stakeholders, we created a committee that formed the basis for the finalization and that formed the committee to set up the bank. The market, we went to a few African countries and learned how things were being done. So the key feature of our fixed income market, which we finally set up in 2015, is that its governance structure is unique. The Council of the Stock Exchange authorized for what we call the Ghana Fixed Income Market Committee to be set up. And that committee is an 11-member committee, and they are tasked to oversee activities of the market. And it has representatives from the Ministry of Finance, the Bank of Ghana, the banks themselves, the dealers, etc. That was one key thing for us in terms of how we set it up. Now, the other thing we did that supported the growth of the market was that the Ministry of Finance opened up for private sector engagement to come into the bond issuance program of government of Ghana. Previously, Bank of Ghana was leading all issuances of government. The Ministry of Finance decided that for 2-year tenors and above, it will use the book building approach. And with that book building approach, it opened up for the banks, stockbrokers, other financial market operators to come in and lead the issuances of these securities. So now we have something we call the bond market specialists, and they come into the primary market and underwrite issuances 2 years and above, and then come to the secondary market. In the 6 years that we've set up the GIFM market, as we call it, the fixed income market, the market has grown significantly. In the first year, we traded about 5 billion volume of securities. Last year, we traded 209 billion volume of securities, about 4,000% growth in the 6 years. We have currently about 196 securities listed. 43 of them are corporate bond issuances. As in the development of many bond markets, it starts strongly with the government securities to be followed by the corporate ones. So far, 12 corporate institutions have raised over 12.6 billion Ghana cedis from almost zero in 2015. So that is also another big area for us. And when we started the market, what we realized was that on secondary trading, foreign investors dominated that market. They accounted for over 60% of all trades on the market. Last year, it's flipped. The foreign investors accounted for 23% of all trades in the market, and domestic investors, fueled largely by institutional investors, accounted for 77% of the market. So these are just some overview of where we are, where we've developed to. But I would say that the collaboration, the partnership with market operators, with stakeholders that started the market, that continues to develop the market, has sustained it. Our Securities and Exchange Commission, which is of course the apex regulator, also was very fundamental in making this market. They allowed the GSE to come up with the rules, worked very quickly to approve these rules and develop guidelines for the market. The banks themselves were willing to work with their regulator, Bank of Ghana, and with the GSE to make sure that the market developed as well. So these are some of the key areas we did. We put in place the right technology as well and provided the market options from a technology point of view to book transactions, to record transactions, etc. And the key point for us at the end of the day was ensuring that our market was efficient, had transparency, and improved liquidity as well. In fact, for the first time last year, our turnover was more than 100% of of the outstanding securities on the market. We attain 114%. So some of these initiatives we've put in is definitely helping develop the market. Thank you.
Thank you so much, Abina, for walking us through your journey. Ghana's journey, very, very interesting to hear, but you've highlighted some key points, which is the need to create a new set of investment class, partnerships, and also the role of technology. Sunil, I'm going to ask you to share with us the Mauritius journey, but also add what are the areas that investors are investing in, so the sectors.
Okay. Thank you. Thank you very much, Chair. And first of all, I just wanted to echo Mrs. Amoa's, wishes and thank the African Development Bank for having me participate in this very interesting and very important, webinar on a topic that I think is crucial to the development of Africa as the last frontier continent in the world. I think we've all talked about the big funding gap that today exists in Africa. And for me, based on the experiences of other regions in the world, there's no doubt that the solution, at least part of the solution to this funding gap, would come from the development of capital markets and the evolution and the development of a active bond market is definitely also part of that solution. With regard to Mauritius, I think we've seen some interesting development over the last 10 years with regard to the development of the bond market as a whole. When I'm talking about the bond market here, I'm talking about, of course, the main component of that market, which is the issue of government bonds. But we've also seen a very interesting development with regard to the issuance of corporate bonds in Mauritius over the last 10 years. And to get a sense of how things have evolved, I think sharing some statistics would make a lot of sense. So from a government perspective, if we take, let's say, 2017, which is only 5 years ago, as a reference, we see that the total outstanding amount of government bonds issued in 2017 was about 250 billion Mauritian rupees. And that figure had increased in 2021 to nearly 400 billion, slightly less than 400 billion, which shows a substantial increase. But on the corporate side, if we take the bonds that are listed on the exchange, we've seen a quadrupling of the outstanding amount over a period of 5 years. So, for example, in 2017, the outstanding amount of bonds at the end of the year stood at about 20 for listed corporate bonds, about 20 billion Mauritian rupees. And in 2021, at the end of the year, it had gone up to 80 billion, so a 300% increase, or a quadrupling of that amount. And more importantly, as if we look at the evolution of a bond market, I think it's very important to relate that to the outstanding amount to the GDP of the country, because it gives a sense of how relatively active and relatively deep is that market from a primary standpoint, primary issuance standpoint. So if you look at the figures, the statistics between 2017 and 2021, the total outstanding amount of bonds as a percentage of GDP was about 60%, and it has gone up above 100% and represents nearly 110% of the country's GDP. So with a corporate listed part representing 17% of GDP, the non-listed corporate part representing 10% of GDP, and the government representing about 80% of GDP. So what explains those developments? I think there are a number factors that have underpinned this growth. And I would like, for my part, to focus on the listed corporate side. What is it that, for example, the Stock Exchange of Mauritius has done so as to make its platform more attractive from a corporate issuer's standpoint? So there are two things that we've done over the last 10 years, which I think personally have been quite instrumental in driving the development of the corporate bond market in Mauritius. First, we've brought some fundamental regulatory changes to our listing rules for corporate bonds, and I will explain that very in 1 or 2 minutes. And secondly, we've said that given that Mauritius as a jurisdiction is actively positioning itself as an international financial center, we also brought some fundamental changes to our operational setup at the level of the stock exchange, so that as an exchange which is operating within the framework of what we call an international financial center, it was important for us to give our issuers, corporate issuers, the opportunity to choose in which currency they would issue, list, trade, and settle. So we moved some more than 10 years ago, but more or less during that period, from a rupee, Mauritian rupee, which is the local currency based ecosystem, to a multi-currency based ecosystem where an issuer could raise capital through the form of a bond, a corporate bond, or also equity. But since the discussion here is about the bond market, so I'm not going to focus on equity, to raise the money in the form of issuance of a corporate bond in rupee, in dollars, in euro, in British pound, in South African rand. And that's not only the issuance part, but once it's listed, our platform would allow these bonds to be traded in any of those currencies that I've mentioned, but also settled in any of those currencies. So basically, when we did that, we were not only giving our local corporate bond issuers the opportunity to choose in which currency they would raise the money, depending on where the target investors were. So if most of their target investors were Mauritian institutional or retail investors, it made sense for them to raise that in Mauritian rupee. But if they were targeting, let's say, an international investor, so choosing another currency which would suit the requirements of the international investor would make a lot of sense. But we went above, way beyond not only targeting the local issuers, but we also wanted to target some niche international issuers from Africa and from elsewhere, including those that are today incorporated in the global business sector in Mauritius, to leverage on our platform to issue bonds, raise capital, and list and trade. So this has been very important. We also brought a very important change to our listing rules. In our previous listing rules, when an issuer would come, a corporate bond issuer would come to our market, they had to issue to a minimum number of bondholders, which in those days were 100, okay? And they needed to make sure that they had a wide participation of bondholders. We realized that's important to ensure secondary market liquidity in the corporate bond. But as an exchange, we are here also to serve the interest of our issuers, which is tailor-make our rules so as to fit the requirements of the issuers in terms of what they are trying to achieve through the exchange platform. So for example, some of those issuers came to us and said, listen, we want to raise 100 million, let's say US dollars, through the issuance of a corporate bond, but we are not interested in having small ticket participants to that issue. We are aiming at the big institutional guys who would be contributing. So our previous rules would not allow that to happen. So we had to be nimble to adjust our ecosystem to fit the requirements of our corporate issuers so that they could leverage on our platform to help fund them for a number of things that they were doing. So we introduced what we call rules for specialist debt instruments. So while we were catering for issuers that could be targeting a wide audience for investing in their bonds, we are also introducing new innovative framework and listing rules to allow issuers that had very specific targets, that had very specific requirements, to help them leverage on our platform. So that specialist debt rules catered for that kind of issuers. So all this has definitely changed the ecosystem in which we're operating and has made us more responsive to the requirements of our issuers and has helped our market develop quite a lot over the last few years. So that's from the corporate side of things. Now, there's been other developments from a regulatory perspective from our central regulator, which is the FSC, which also introduced the need for issuers that were not listed. If they were targeting more than 25 bondholders, they had either to be rated, okay? So there was a rating agency that was set up in Mauritius to rate private sector issuer bonds and give the comfort to the bondholders or those that were targeted that you could assess the risk profile of these issuers in an independent manner and get a good sense of, you know, how these issuers would perform in terms of making good on the servicing of the loan and eventually in terms of making good for the repayment of the capital. So all this has helped to create an appropriate ecosystem to bring more transparency, more confidence in the system, but also to bring in more flexibility with regard to the issuers that were concerned with that. From the government side, the government bond market, quite a few years ago, the central bank came with a primary dealers system where 5 of the largest banks in Mauritius, based on on very specific criteria determined by the central bank, they chose those 5 banks that met those criteria, and those 5 banks, being on the list of primary dealers, have to purchase whenever government issues any bond, be it a 5-year, 10-year, whatever, they are obliged to purchase on the primary market these bonds, and then they also obliged to make a market on these bonds on the secondary market for other types of acquirers or buyers of these bonds that could not have access to the primary market. So by pushing those primary dealers to make a market on the secondary market, of course, it makes it more appealing and more enticing for other buyers of these government bonds. So this also explains why we've seen a certain development of the bond market. There are so many reasons. For example, another reason, very quickly, because time is of essence, I'll stop here. One thing that has helped the corporate bond market to grow, it's because investors have found that the spread of the yield to maturity on these bonds compared to what they were getting on bank deposits were in favor of these bonds. So this, of course, was a commercial reason or a financial reason why people were interested to purchase these bonds. And the issuers too, they found out that they were able to raise capital at lower rates than borrowing from the bank. So there needs to be a number of conducive factors that come together so as to really create the kind of ecosystem that then starts, growing and creating the kind of critical mass that is important. So I'll stop here because otherwise, we can spend the whole day talking about the reasons why there's a lot of scope for the development of bond market. Thanks, Chair.
Sure. Indeed. Thank you so much, Sunil. Really, really interesting. I could spend a lot more time listening to the story of Mauritius, but I think you've highlighted, both Abhinay and Sunil have highlighted something very important, which is the importance of taking an ecosystem approach to growing your domestic capital markets. And Sunil also talked about regulations and being able to attract foreign investment as well. What I haven't had is, where is the money? What are the sectors that this money is going into? So you can answer this later, but I'm very curious to hear, for example.
Well, but just in one line, I think it's going to different sectors in Mauritius.
Yes.
I mean, you know, we're a very well diversified economy, and if you look at this, the issuers that have come to the market and that have been issuing bonds, they operate in all the sectors of activity that you can think of, which you know, acts as a basis of the economic structure of Mauritius. So tourism, financial services, BPO, global business companies, that is those companies that are structured within that global business sector in Mauritius, but which are investing outside of Mauritius, in Africa, in India, and so on. So it cuts across a spectrum. There's no, it's not as if the money that has come through the bond market has been targeted to a very specific sector. I think the most important thing for issuers when they go to the market is to demonstrate to the potential buyers of these bonds that they are credible issuers, that they have a good business plan, that they've delivered in previous issues on what they've raised, and so many other criteria. So it's not as if the sectors have been specific. It has cut across the different sectors that underpin the Mauritian economy.
Sure, thank you. That's also helpful as well. So I'm going to ask Jim and Ahmed to tell us what instruments as DFIs they have available to support countries which want to grow and deepen their local currency bond markets. I'll start with Ahmed. And Ahmed as well, you could speak to the issue of really trying to strike the balance between growing the corporate bond market versus government bonds.
No, excellent. No, thank you again, and thanks for my fellow panelists, and of course for the participants for being here today. So just to answer this, answer the question and to give the feedback, I need to share the overview and a general overview of our mandate that emphasizes mainly on strengthening the capital market institutions, supporting the creation of enabling capital markets environments, working with different type of stock exchanges. So the two CEOs we have today, we have been engaged with them and their teams on different occasions. Mr. Sunil and his team is actually one of our prime clients in different forms. We are also broadening and deepening capital markets in Africa through the introduction of new asset classes. And here I'm talking about our endeavors to crowd in ESG, to introduce ESG bonds, gender bonds, green bonds, and so on and so forth, that we need to use to crowd in institutional investors, mainly pension funds and insurance companies, to ensure, actually to promote access to innovative and alternative capital market solutions, which eventually will promote access to long-term local currency funding. In that same vein, we are also very active when it comes to knowledge management, dissemination, and capacity building. And doing this, we are using different type of the bank available trust funds, primarily the Capital Markets Development Trust Fund, the CMDTF, which we are really using to leverage, and with the donor support, with the general support from our donors, the government of Luxembourg and the government of Netherlands, and we are trying really to leverage those precious resources in creating an enabling environment in West Africa. So those pillars I just talked about are shaping and informing our endeavors in creating a conducive, deep, and liquid capital market in Africa. That is really key for the delivery of our 10-year strategy and its high five agenda. Precisely, our interventions are programmatic. So when you look at what we have been trying to do in the last few years, you will find us using, again, different type of lending, non-lending, sovereign, non-sovereign operations. We are really trying to tackle the developments of the building blocks of the local capital markets in Africa. And here I'm not talking about a country, I'm not talking about a region, I'm talking actually about the whole of Africa. And in doing so, we are really seeing our division was established in 2014, but today we're 2022, and I can tell you that a lot of success stories we have been hearing, a lot of new type of regulatory frameworks, new products. Well, this, even if we are not being on the front line, but we were there somewhere creating this kind of enabling environment. So to give you a flavor, I mean, when it comes to legal and regulatory framework, we are working, and actually we worked as well closely with our partners and local stakeholders in maintaining fair, efficient, and transparent markets. So you will find us working with different type of regulators across the continent to strengthen their capacity for. A transaction that was recently approved and is actually under implementation is our support to the SEC, Security Exchange Commission of Nigeria, and we are helping them to move towards a risk-based supervision that will help them deploy a market surveillance solution system so that can monitor the capital market activities in real time. This is new. This was not there, and this is new. Also, when it comes to the development of the primary markets, I mean, we're laying the foundation of a functional local corporate bond market. So we are closely working with debt management offices who are using our budget support products, who are using our policy-based operations to bring the necessary capacity in place to help them in implementing their issuances strategy. So you will find us working with the governments in strengthening the debt management offices, as I said, to ensure planned, structured debt issuances to contribute to the construction of a healthy yield curve, including benchmark issuances. And this is something that we have been seeing in the markets thanks to different type of interventions. The same applies for the secondary market developments. So this is very important, as you will find a lot of participants who want to trade on a cost-effective and transparent manner. So the bank, the African Development Bank, for instance, we are supporting the upgrade of an electronic trading platform to enable Cabo Verde market makers to display bid, ask price, and boost secondary market trading. And why I'm giving those examples, those are not all what we are doing, but this is just to give you a flavor of what type of interventions we are doing using what type of resources. So whatever I'm mentioning here is actually type of technical assistance grants that is being structured in collaboration with the local stakeholders. So in the same vein, we're also closely working with institutional investors as we see the longer term liabilities as an opportunity that we must leverage, not only for the interest of our just the figures or the numbers, but actually this is the most precious long-term local and foreign currency funding that is available and is really conducive to support the funding gap in infrastructure and also in supporting real sector development. So when you look at what the bank did, and this is different type of support, that we supported pension funds reforms, we did it in Seychelles. We're now trying to introduce new type of institutional investors. So you will see us working with CDCs, which is the Caisse de dépôt et consignation, in different West African countries as a new type of institutional investors in the Francophone space. You will also find us sitting on different boards of several insurance, reinsurance, liquidity vehicles in Africa, where we are engaging with them strategically to ensure that they are also investing and also mobilizing resources to the markets. Last but not least, our endeavors to develop the financial market infrastructure, again, using our funded facilities, be it a grant, be it a loan, be it a budget support or a policy-based operation. So one example is the West Africa Economic and Monetary Union Central Security Depository that we have just approved the transaction for them. And we're really trying to help them to automate the issuance process for government securities. So those are the building blocks. From another, and briefly from another dimension, we are also working with our blocks. So you will find us working with the Africa Stock Exchange Association, and I'm sure Mr. Celine will allude to this shortly, as we are also sponsoring and supporting the Africa Exchange Linkage Project, we are trying to take another step upward, and we are trying to actually walk the talk by taking first-time bond issuance to capital markets. So we are trying through an innovative solution to play a role of an anchor investor, a source of credit enhancement, a source of technical assistance that can be used to prepare the information memorandum, listing requirements, rating, and so on. So this is a program that we are trying to put in place. It's not yet approved, but it's a very ambitious program. If it sees the light, and it will see the light very soon, we will hopefully be able to anchor bonds. We'll also be able to take first-time bond issuers to local capital markets. I think this is more or less, as I said, we're using different type of products, debt, sub-debts, equity, grants, and so on. So I don't want to deep dive in our products, but allow me to stop here, and I will of course come later to explain more. Thank you so much. Over to you.
Sure. Thank you so much. Those are really, really, really good and very practical examples. And I mean, the need is really huge on the continent. I would like to hear from Jim, if he could speak to what are some of the examples in the work that the EBRD has done in other emerging markets, and what are some of the lessons that we could learn from those countries?
Thank you very much. It's nice to be here. Just firstly, EBRD is currently not engaged in sub-Saharan Africa. So, but we do have a specialist capital market division unit, of which I'm in charge of the product area, or the particular product area. And one of the things that I think everyone's focused on, right, and to a certain extent, is the fact that we need to develop a range of product for a range of investors. This is not a single dimension type of activity where we turn around and say, okay, we'll just issue bonds and then it'll all be okay. This is not the way that these financial markets work. The financial markets work, right, by providing a diversity of investors and a diversity of instruments. And that was brought up very, very well by Abina very earlier, much earlier. But we need a balanced investor base, which is made up partially of domestic investors and partially of foreign investors. We don't really need to see a dominance of one particular asset class over another. But what we do want to see is some sort of variation in their investment desires. One of the major parts of a study that was done by the World Bank many years ago said that the most important thing for the development of a capital market, or a functional capital market, was diversity of investors. And that's one particular area that we need to look at. Now, how do we get diverse investors? Well, we offer diverse product. And this goes back to Sunil's point. If you're a single dimension market where you only offer one particular product, the interest in that product disappears over time. So there's a constant need for innovation of particular products. There is also a constant need for innovation in things like hedging instruments to allow international investors and local investors to transfer risk between each other based on their risk profile. And that's currently something that exists, that doesn't exist in the market. So really it should be easy. We just issue 1 million products out there and we'll live happily ever after. But that actually doesn't work that way. What we have to do in many different ways is we have to look at capital market reform as a long-term project, that with multiple angles and multiple approaches that we need to ensure are functioning together. The elephant in the room when we talk about functional bond markets is the lack of a stable funding base and the lack of a stable government bond or risk-free curve for most of the markets that exist. And that's the basic element of pricing for all instruments, including the hedging instruments, including derivatives. So without the functional liquidity, secondary market liquidity to confirm where these instruments are trading, we're not going to see a process of sequence development. So the clue is, right, the clue's in the name. Everybody says in capital market reform, what should we do? And the clue is not to do everything at once, to look at the sequencing of the market, right, so that it builds on the success, right, of each instrument as we move forward. So The major priority in the early stage markets is obviously to create funding certainty. You know, and the best way to create funding certainty is probably to use the secured instruments, secured collateral, probably government bonds. So as a part of that, right, funding certainty can actually lead to development of the secondary market in government bond markets, which then leads to the establishment of a reliable benchmark curve, which then leads to corporates being able to price assets efficiently. Now, in emerging markets, nothing is ever going to work quite as well as we want it to until there's a perception of a certain level of interest rates or interest rate certainty, until there's a belief that you know the risk-free pricing in each country and in each market. So they're basically the drivers that we need to see to develop financial markets. There is another area that none of us have focused on at the moment, but it's what I call the tyranny of size. Markets, domestic markets can be too small. And with that type of element, how can you develop a capital market? Unless you're an entrepot economy such as Singapore or Hong Kong, it's probably not going to happen. The reality is, right, that there's probably 100 financial centers out there that say that they want to be international, but only the entrepreneurial economies are the ones that are likely to succeed in that particular area. So what is the solution if you can't, if you're too small? Regional initiatives. And, you know, Africa actually presents a template there for other countries. The WAMU itself, right, the economic zone in West Africa, is being used by ourselves to advocate an integrated capital market in the Baltic states. We advocate along the same lines that they should be viewed as a single country or a single investment destination, because that's how investors look at it. So the reality is, right, that we have to do a whole, you know, there is no single recipe for success in capital market reform, and particularly in bond market reform. But the clue is, right, to adopt a sequenced approach, and obviously to get a certain funding market, money market reform has to occur far earlier than extending the yield curve. If we don't have a decent money market reference rate in many of our countries of operations, how can we price long-term assets? We can't. Right? And if we can't price long-term government bond assets, which are the easiest assets to price, how can we then price long-term corporate assets? And the reality is that that uncertainty means that the cost of issuance won't be competitive. So the reality is that we need to function on a broad number of elements, but the first area that we do need to look at is money market reform, definitely, and then concentrating on developing secondary market liquidity in the reference market. If you're successful in those, then there's a very, very big incentive for corporates to actually go there and issue bonds, because it will be competitively priced over time. And I'll stop there because it's, you know, it's not particularly germane to Africa, but it does reinforce a lot of the words that have been raised by Sunil and Abina and Amit. Thank you.
Thank you. Thank you so much, Jim, because I think you've raised and you've summarized some really key points, which is the need for sequencing, as well as the role of regional integration. I mean, in East Africa, for example, we have 2 financial centers coming up, one in Kenya and one in Rwanda. And I've been looking at both and they both look the same to me. So it's going to be quite tough, especially considering they're in the same regional group. We have a lot of questions for the panelists, which is really good. But I just want to ask one more question with regards to technology. And I'm going to ask Abina to speak about the role of technology, particularly in ensuring that ordinary people like me are able to invest in bonds.
Thank you very much, Chair. Just before I get to that, I wanted to mention that in Ghana, one thing our government did was that they also agreed to list all the existing and all future issuances automatically on our fixed income market. And not only were they going to list them, but they were going to pay fees. So that very important initiative from our government also stabilized the market and ensures its sustainability and our ability to invest in people and systems to drive it. And through that also, they've extended the yield curve. We currently have up to 20-year government instruments on the market, on the back of which corporates have so far issued. The longest term, I think it's 10 years. The other key thing we've done around, and it ties back to the question on technology, is that we've been engaging best practice around the world at the fixed income market. And African Development Bank's African Bond Index is one of the things we look at keenly. The AFSA UNFIF African Financial Markets report or index that ranks 23 African countries is something we keenly observe and look at how Ghana's standing is, what are the shortfalls there, and how we can improve them. So for example, in 2019 on the AFSA UNFIF ranking, Ghana was 13th position. And last year, through addressing some of our shortfalls, including introducing standardized agreements on the market like the Global Master Repurchase Agreements, we have climbed from 13th position to number 4 position on that index. So this is work we're doing consistently. Another area we've highlighted, of course, is technology and how we bring in the domestic investor base. It's one of the areas we are relatively weak on, and we have been thinking very carefully about how we deal with that issue and improve it. Again, it goes back to our pension sector. Our pension sector in the last 10 years has grown to overtake the state pension funds. So as at the end of last year, we're estimating they have about 25 billion Ghana cedis under management, which is about $3.5 billion US dollars in perspective. This sector is growing very rapidly. Every year, they are looking to bring in up to another $100 million in new investments. A lot of these contributions are coming from people in the formalized work sector. So how they reach out to what we call our informal sector, where over 70% of our labor force operates from. And this sector is so vulnerable because we're realizing they don't have formal pension plans. But many of them are engaged in quite fruitful ventures today. So it's become one of the key areas we're looking at, and realize that technology is supporting that. In 2019, the Ghana Stock Exchange won the most innovative African securities market from the African Investor Group. And that was really on the back of an initiative that we did on the listing of MTN Ghana, which IPO'd in 2018. For the first time, we tried an IPO through technology where people could use their mobile money wallets and apply on their cell phones and on their mobile devices to open accounts, register, and buy securities. And we did this successfully, and over 130,000 retail investors came into the market on this platform. We are realizing the power of this innovation. And today, if you are registered on any of the networks in Ghana with as little as 50 Ghana cedis, which is about $7 or $8, you can open an investment account. You can enter an order to buy a treasury bill. You can make an investment or buy a pension product. So we're engaging the mass market. We're also engaging the informal sector. For instance, our pensions regulatory authority has been working with our cocoa sector regulator, because cocoa farmers represent a very large workforce in Ghana. They are organized but do not have a formal pensions, didn't have a formal pensions product. And so now there have been an initiative, and we've launched now the cocoa sector pensions product. We are using technology to attract these people into the sector. The stock exchange itself is also working with fintech groups. So with the fintech groups, what we're doing is that we've worked with some of them to introduce new products, apps, online trading services, and that allows and takes the investment process to the pockets of the retail investor. We launched some of these products last year, and we plan to launch about 3 of them again this year. Going out and talking in fact, running the national roadshow has become very critical for us, because not only is it important to do the investment literacy programs, but it's important to give these people you're talking to a tool that allows them to convert or act on the investment learnings that they're doing. Another area we're using technology, and I know Sunil will be talking about the African Linkages Program, which the Ghana Stock Exchange has joined. But one of the key initiatives for those of us in the West African region, following on Jim's point about size of the market, is the West Africa Capital Markets Integration Project. The West Africa Capital Markets Integration Project, the securities markets, the Central Securities Depository, and our SECs have formed various committees that is looking at standardizing and mutually recognizing licensed operators across the various markets, such that a West African, an authorized broker, one that's authorized by the markets to operate in the 4 main markets in West Africa, can not only trade existing securities on our market, but can also launch a public offer across the markets. So we have what we call qualified access brokers, and they can launch once they are the SECs of the 4 markets, BRVM, Ghana Stock Exchange, NGX, and of course, Cape Verde. Once you're recognized, you can actually launch capital raises across the market and also trade securities across the market. All this is only possible through technology. So it's a project we're working on very, very hard. We've harmonized the rules. We've made presentations to the regulatory body, which is called WASTRA, which is made up of the SECs of Ghana, BRV, Nigeria, and Cape Verde, and we are waiting for their final approval to take the project forward. COVID has taught us that without technology, we will not be able to move forward. So seeing the banks, seeing the stockbrokers, seeing the telecom companies partner with us to come up with solutions, not just for our institutional investors, but also our retail investors, and also solutions for regional operations of the market, is a very critical initiative that we think will unlock many of the opportunities.
Great. Thank you so much, Abina. Now, we don't have a lot of time remaining, and I want to be very efficient. We've been asked very many questions by the audience, and I'm going to cluster some of them together because they are around the same theme. I will also invite my panelists to please answer questions directly in the Q&A section if you can, for some of the very, very specific ones to your market. So for example, for Sunil and Abina. But Sunil, there is a question that I would like you to answer, which is on the business case for green bonds, the business case for gender bonds. Do you think there is opportunity there? For Ahmed, there is a question on cryptocurrencies, which is, has any of the organizations involved with these funds ever opened up to cryptocurrencies? And for Jim, is there a possibility to cross-list in different regional exchanges in order to boost resources available, especially in view of the Africa Free Continental readiness? So even just some lessons from Europe and its regional integration as well. So over to you, Sunil, first.
Yeah, so just quickly, I know you're pressed by time, but before I answer that question on green bonds and different types of bonds and the potential for that, I think it is important for me on the technology side to talk about a very important project that is currently being rolled out by the support of the African Development Bank, and which I think Mrs. Amoa has just touched on. It's the African Linkage project, which will bring together some 8 or 9 exchanges across Africa and use technology to cross-link these markets. And the important thing about this is, as Jim was talking, I mean, at the end of the day, liquidity size becomes important. So how do you create that kind of ecosystem? It's by allowing, let's say, brokers from Kenya to trade online through the Mauritian platform and vice versa, with the hope that this will enhance liquidity over a period of time and create that kind of ecosystem which is meaningful, not only for those investors that are part of that, of those 9 exchanges, but also the foreign investors that are looking at having a stake in the African growth story. So having that integration and improved liquidity is going to be very important. But this being said, I will hasten to say that for me, technology is always an enabler, okay? It facilitates things, it facilitates integration, but for this to really work, this African Exchange Linkage project, it's very important that there is what I call educating the investors, for example, in Kenya, to learn about what are the good investment opportunities in Mauritius. So there is a fundamental need for, let's say, the brokers in Mauritius to educate their counterparts in Kenya about the good investment opportunities that exist in Mauritius. Otherwise, we could have created this platform, link everybody, but the traffic will not be up to the level of our expectations unless we tackle and we ensure that there is a strong sensitization of the different operators across the 9 countries about what are the investment opportunities that lie in the different jurisdictions, and that concerns equity products as well as fixed income or bond products. So that's very important. And to come to your question on green bonds and gender bonds and so on, I think it's very clear that the world today is confronted to one of the biggest challenges that probably we would have seen for our generations, which is climate change. So I don't think we can be oblivious to this. And when I say I'm talking about governments, I'm talking about private sector operators. So, for example, I take the case of Mauritius. Mauritius is a small island economy. And based on the UN grading system, Mauritius is one of the most vulnerable countries, among the top 10 vulnerable countries to climate change and the impact of climate change. So it is very obvious for me that the government of Mauritius, while it is trying to bring its contribution to this fight against climate change, has to identify those projects that are environment friendly, that will keep the ecosystem as we know it in Mauritius, and ensure the sustainability of Mauritius as a green economy. So there is an obvious demand. There's an obvious, I won't say demand, but there is an obvious opportunity for the government of Mauritius to target these projects that, you know, would fit within the description of green funding or sustainable funding, and issue green bonds and sustainable bonds that would be targeted to these specific projects that would support the Mauritian economy in ensuring that it remains a sustainable island for a long period of time. We do understand that whatever we do as tiny Mauritius to combat climate change, we won't achieve much unless there is a global consensus that everybody carries its weight in combating that problem. But this being said, we need to put our money where our mouth is, and therefore we need to push for the greening of the Mauritian economy. And this also concerns the private sector operators. But I do contend that from a private sector standpoint, they will need to justify the commercial side of issuing a green bond, whereas from a government perspective, you have developmental objectives, you have responsibilities that private sector operators also have, but they would always look at it from a commercial standpoint. But I do believe that there is scope, even for private sector operators in Africa, to issue green bonds and to target the funding from these green bonds to very specific projects that will help them improve their cost structure or whatever. For example, I take the case of hotel industry in Mauritius. We know that they use a lot of their resources in terms of, very protecting the beaches and ensuring that there is no erosion and so on at the level. So if each hotel could protect its own little environment in which it operates and issue a green bond for that purpose, I'm just illustrating a case here. I think this will go a long way in developing that market. It's still at a very inceptional stage right now. We're just at the very beginning, but I think the scope of developing new products with green features or sustainable features is definitely something that will also drive this market going forward.
Thank you. Thank you. Thank you so much, Sunil. Ahmed, I'm just going to give you like 3 or so minutes to respond to the question on cryptocurrency.
No, I think I would even take less, but I would just try to be very conservative in what I'm sharing. So cryptocurrencies is something that is new. We're noticing it. We're seeing different African governments growing through this route. And we are in the stage where we are assessing internally, what can we do? What value added can we bring to this discussion? Is it a sustainable model actually as a cryptocurrencies? And if it's sustainable, then what can we add to this and how it's good to our societies? And then we will design our type of interventions. Will it be a type of, like, we're giving the right support to be a more regulated type of trading, or we will just be we'll just say, okay, it's good, maybe it's for the private sector to handle. So we, just to give a clear answer, that we are at the monitoring stage. We are following very closely the situation on the ground, but as of now, like many other DFIs, we don't have a clear policy on how to support. We have some studies, but we don't have a policy on how to intervene and support cryptocurrencies in Africa. I hope I just trying to be very conservative in what message I'm sending out. So thank you so much, Wambui.
Sure, thank you. Thank you. Yeah, we are monitoring, we're following, we're watching. Jim, there is a question that is quite persistent that has come up, and it's around the issue of how local currency bond markets can benefit SMEs. And it is a pertinent question, given that SMEs for a major part of our economies. And Sunil also did talk about how companies, both listed and unlisted, have been able to access cheaper financing through their capital markets. So I'll ask you to answer this question.
Yeah, okay. In terms of the issue that we're talking about, which is cross-listing and FX risk, of course there's an FX risk associated with any sort of cross-listing. Right? So that's, this goes back to what I was speaking about earlier, that we need to create hedging instruments that will allow international investors to walk into the market and to insure against the risks that they don't want to take. Quite frequently, that may be a currency risk. So in that case, right, yes, as FX is needed, and so are hedging instruments. Of course, hedging instruments won't develop unless there's a certain amount of interest rate certainty in a country. There's a lot of certainty in terms of dollar interest rates within reason, or within a reasonable margin, but there's a lot of uncertainty in many emerging and developing markets about the level of deposit rates and about the level of risk-free rates. In terms of, there was a question that was asked in terms of SME lending also. Can I just say an SME solution from the capital markets is regarded as the holy grail of achievement. If we can actually come up with something, right, that will service that sector, then you know, you're going to be a superhero. A lot of stuff has been tried in the past, right? Mini bonds, a lot of people were advocating, but they're expensive and they're cumbersome to issue. There's been a lot of advocacy about first loss tranches by the government, but that tends to lead to directed lending to sectors that may not be in the interest of all investors. So the solution that does seem to exist is very, very similar to the Asian situation in Korea, where you know, there is a very, very large development agency which lends to the SME sector, but then issues bonds against the collateral of particular sectors in that market, and can issue bonds fairly cheaply, and so on that basis can obviously pass the savings through to the SMEs. But the problem with SMEs is they're small, so they have to be evaluated. They all have to be evaluated according to a methodology. You can pool them, but the pooling is not perfect, right? So they're not as poolable as credit card receivables or as other instruments that we use for securitization structure. So as at yet, right, there is no solution in this particular area. There was also some talk about multi-listing bonds in multiple jurisdictions. We actually attempted to do this several years ago in the Western Balkans, and we advocated something called the Southeastern Europe link. Right? The clue to the success there, right, is to ensure that you've actually got a linked depositories, because it's not about being able to trade the instruments, it's about being able to clear and settle them. And in that also there is the FX risk consideration. The FX risk consideration is not spot risk. It's risk for the maturity of the instrument. And a lot of people don't understand that. They think, oh, that's great, right? We can get a spot rate, right, to convert into, you know, Serbian dinar or Mauritian rupiah, and that's absolutely wonderful. But that doesn't mean that you're hedged in terms of your currency risk. And the absence of long-term currency risk instruments is one of the things that will hold back the development of local currency bond markets. That's one of the reasons why we focus very, very heavily on derivative reform and encouraging the development of these projects to allow everyone to hedge the risk that they don't want to assume. Sorry, I tried to answer a few of the chat questions at once. I'm sorry, I don't know whether I went off piece, but I hope a few people got the answer they wanted.
Yeah, it was really good. And I'm really sorry to our audience that we don't have enough. I mean, this is a really interesting and engaging discussion. We could almost have a part 2, but we now only have a few minutes to close. We'll have a discussion with the team about the rest of the questions, but we will be distributing them to the panelists just so that people can understand the kind of questions that people ask, but also the type of need for knowledge sharing that is out there on the continent, especially with regards to this topic. I'm now going to invite Mr. Atut to give us his closing remarks. Over to you, Ahmed.
Thank you so much, Wambura, and thanks again for my fellow panelists, and again for the participants. I think we had a very good number of participants, and the level of questions, I mean, it's really remarkable. And this really means that the topic of capital markets is not only our problem. I think it's nowadays it's a hot topic, and I'm very happy to see this kind of attention to this subject. I think going forward, we are still in the game. I mean, I think what we are trying to do here is really to start sensitizing the market and the stakeholders on where we are. What are we trying to do from an exchange perspective, from DFI's perspective? And this is what we're trying to do on every now and then. I think going forwards, we will need to do more, and actually we are doing more, but I think we need to keep this kind of dialogue in form of panel discussions, or even in form of, webinars or dialogue, sessions where we can, as as active stakeholder can reach actually more advanced solution in a shorter period of time. But having said that, I think capital markets in Africa is key for the development. If we don't have a vibrant and stable and reliable capital markets, I think we will have a problem. So I think we are still, I can say that we are on the right track. I'm seeing a lot of movements on different stock exchanges and different, even at regional level. So I'm confident that in few years' time, we will really be seeing remarkable improvement on capital markets, more listed companies, more liquid, more deep. We will definitely see more DFIs even chipping in the nearest future. So I think the term of liquidity, innovation, and even new ideas, this is for the interest of Africa and the people living in Africa. So with this, Wambu, again, I thank you and I hand over to you. Thank you so much.
Thank you. You've said it really, really well. And you made me remember when I started out as a young reporter, just fresh out of university, I used to have to call the Nairobi Coffee Exchange literally for the coffee prices and then input them into the Reuters system for them to go to all over the world. So we have indeed come a long way, but we have a long way to go as well, given the need on the continent and our ambitions as well as a continent. So I want to say thank you so much to our distinguished panelists. Thank you to the audience. Thank you for sharing your knowledge as well, dear panelists. And I also say thank you to the Making Finance team for just organizing this and putting this all together. You were very cool and calm, and you've done a great job. And thank you to our co-hosts, the Capital Markets Development team at the AFDB. So I would like to wish everyone a very good afternoon, evening, morning, wherever you are in the world, and we shall keep in touch. This session has been recorded, and so you will be receiving a recording of it in your inboxes, and it will also be put up on the Making Finance Work for Africa website. Bye-bye, everyone.
Thank you.
Thank you. Bye. Bye-bye.
Yeah.